This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi guys, this is Joe Rabil. Want to talk today a little bit about struggling with trading. If you're struggling right now, if you're having kind of a tough time, if you've had a losing streak, if you're having a tough time pulling the trigger, there's a whole host of things that could be kind of haunting you right now. And I want to kind of give you what I think is a really good recipe to get yourself out of a rut, or when you're feeling like you can't put on a good trade, or really hesitating about pulling the trigger. So one of the things that I think I would suggest to you is that you don't always have to have a trade on. You don't always have to be trading. And actually, the way to be successful, in my opinion, is I think a true trader is someone who understands that sometimes trading means standing aside and doing nothing. Meaning, when you don't have a trade on because you can't find something that you really like, that's still trading. And then you have to sit back and be patient enough and wait for a time when you find something that you actually do like. And when you do, that's where you have to pull the trigger. So it's very difficult, because you can go a long period of time where you've been looking and looking, not finding anything. And then all of a sudden something comes up, and it might come up quicker than you thought, and you see it and it's like, wow, this actually looks pretty good. And then you have to be able to pull the trigger right on the nose. So I think trading is one of the more difficult endeavors you're going to ever try, and this goes for long-term investing too. Don't think that even though I use the term trading, for me, anytime you're going to buy something that you plan on selling, then to me that's trading. So even if you're planning on holding it for 5 to 10 years, I still will call that a trade. If you're going to buy something and forget about it and never sell it, and you're not going to worry about whether it goes down or up or anything like that, you're just going to hold it, then that buy and hold strategy I wouldn't call trading. But anything else where you plan on getting in and getting out, I think the shorter the time frame, the more difficult it is from a psychological standpoint to really kind of follow your process and do the things that you need to do. So that's kind of what I wanted to address today. But let's just start. I wanted to just make a mention of, so this is a quote from Jim Rogers. Jim Rogers is a fundamental guy. I'm pretty sure that he's never looked at a chart in his life. So I'm a pure technical guy, but at the same time, I think we can learn things from all different types of investors, and this guy has done really well over time. He's in the Market Wizards book. And if you think about what he's saying here, he basically says, I just wait until there's money lying in the corner and all I have to do is go over there and pick it up. And I really like to think this way. And I think one of the things that if you're going to be successful, what I really want to say here is that I'm incredibly picky. And I think you need to be really picky. You got to get good at being selective. And if you're going to get really good at this thing, making money, putting trades on and managing them and everything, you have to get good at being selective. I think it's really difficult when you're putting on boatloads of trades and you're just throwing trades out there and hoping for the best. I think the skill is understanding that the stock might be meeting specific criteria, but by being selective and looking at some of the things that I've been talking about over the last few months about the bars, the individual bars, and the MACD and the ADX, and understanding how to whittle the list down to a smaller group, I think you're going to be a lot more successful. So I just want you to make sure you understand, like what Jim Rogers is saying here, where he's basically waiting till money's lying on the corner. I feel like that's kind of what I try and do. I'm not coming in every day thinking I'm going to put a trade on. I'm literally sitting back. I come in each day and I look at probably more stocks than everybody watching this video combined does during the course of a week. I would say probably I've looked at 500 to 600 stocks before everyone has even turned on their computer. And so, and that's on a daily basis. So, and at the same time, if I find one stock that day that I think looks attractive, that's a lot. I'm probably only finding one a week that I really like. So again, the goal should be to try and get better at being selective. And that's what I think Rogers is trying to say here. He's saying, I'm not putting my hard earned money to work unless I find something that is a true pearl. And that's really what you're trying to find is pearls. So if you're going to think that way, and I think the thing that I can tell you that I believe that can be very, very helpful is I want you to come in every day and say to yourself that I'm not going to trade today. I'm just not going to I'm literally not going to put a trade on today. I'm going to come in, I'm going to look for stocks. I'm going to do the typical things I like to do. Maybe if I'm a swing trader, I'm going to go do whatever screen I like to look at and try and find, but I'm not going to put a trade on when I come in today. And if you think this way and you come in with that mentality, and then you go and you say, okay, if I find something that I just cannot resist, I mean, literally, it looks so good that I just can't help myself, I have to put it on, then you put that trade on. But otherwise, you come in every single day and you say to yourself, I am not going to put a trade on today. I'm just going to go through and look at stocks. And that takes the pressure off. Now, all of a sudden, you're just sitting back and you're saying, okay, I'm just going to do my work. I'm going to do what I like to do. I like to look at these types of charts. I like to look at this time frame, and I'm not putting pressure on myself to put a trade on today. And I think that I can tell you that, again, I work with a lot of guys one-on-one, and the one thing that I can tell you, because I went through this myself for a long time, and I think you feel like if you're a trader that if you don't have a trade on, then you're not really a trader. But again, the art of becoming selective is going to take you to a whole nother level. And I've been trying to help you with little bits and pieces, and I'm going to keep doing that over the course of the next few months. But I wanted to step back and explain why I'm doing what I'm doing and giving you a little bit more detail about individual bars and that type of thing, because I want you to be better at being selective. And the way you can do that is come in every day and say, I'm not going to trade today. And if I come up across something that is literally just so good that I can't stand it, I have to be in it, then you do that trade. But otherwise, you just don't do it. And so the way I would look at it is, I did this. This is actually a slide from another video that I did a long time ago. Many of the people that are subscribers now very likely did not see this specific video. And the video it's kind of funny. I think it's how a technical analyst, how Warren Buffett would be if he were a technical analyst. And I think I like the idea of when I put on a trade or an investment that I'm sort of looking at it like I'm buying a piece of a business. I'm not buying the market. I'm not getting in because I think the market's going up. I'm going in because I like the criteria that a single stock fits everything that I look at. And if I have something like that, then I'm going to do it. And it's got to meet everything. And if my partner and I, if we see something we just don't like about a specific stock, we just pass. And so when you get good at being selective, then all of a sudden your win rate starts to go up. Then your confidence level goes up and you let stocks play out. You don't pull out of a trade early. You don't stop it short. You don't pull your stop up too tight and then get stopped out of the trade and then watch it go up, because you have the confidence to know that you have done the work and you have found a stock that meets everything you look at. And now I'm just going to follow my process. So my specific process, again, my favorite one is this specific these seven pieces of criteria. Number one being a sideways line, meaning I want something that's kind of gone sideways for a period and bumped its head like this gold stock, this GLD had done for several years. It had bumped its head up on that horizontal line and it it kept on getting rejected, and then it finally got through. So that's that sideways line. And then the longer that it has a sideways line, the bigger the base, the higher the probability you have some real potential. And the price pattern, meaning in this case, it's an ascending triangle. It's always nice to have either a rectangle where you can draw trend lines in, or an ascending triangle, or just a regular triangle, a symmetrical triangle if you want. That's always good. But my point here is you want to have the longer the base, the more times you've bumped up against a specific area, and then you get through it, the more important it is. And a lot of people like to shy away from buying new 52-week highs, but understand, if you're hitting a new 52-week high for the first time after it's bumped its head on that level for a very long time, then it's really probably the start of a move, not the end of a move. Number 3 is the price structure. So you do the 1, 2, 3 change in trend, and you look to see if there's a reversal in place. In this case, breaking the horizontal line is actually the shift back to the upside on the long-term trend. In this situation, you would draw the downtrend line, and then it rallied up. And where that horizontal line is the rally up. And then you made a 2, and you came down and tested. And then when you finally took out the horizontal line, that was the change in trend to the upside. If you notice, look at the low ADX. Look at how long the blue line. It was about 3 years where it stayed below the red and the green for a very long time at a very low level. That's telling you that you have low trend strength. And in low trend strength is where a trend, where a pattern is coiling for a big move. And this chart is not up to date. Obviously, this GLD this is early 2019 when it broke out. It went up for a couple years. It has made a substantial move. I don't have the chart updated, but the GLD has made a substantial move. Go pull it up so you can see what actually happened. The other thing I like to see, and really the 4 and 5 kind of combine to be 7, meaning I'm looking for compression. And low volatility is when the price action doesn't have wild swings to it. They're kind of compressed. The swings are getting more narrow, and or not as much volatility associated with each swing. And if you have that and the price action is starting to shrink as well, then you have a pretty interesting setup developing. The other thing I do like to see is on a long-term pattern, seeing a stock hold its 18-month for the first time, which is basically what took place here again in 2019 when it had that minor pullback. So this is kind of the criteria I use for a long-term investment. Now you could take pieces of this to use for shorter-term trading or whatever. And this is this is my breakout trade. I do use other trades. I like pullback trades. But in this case, if I'm sitting, and I'll use a golf analogy. So if you're struggling, if you play golf, if you're struggling sometimes to hit the fairway and you just spraying it all over the course and you just want to get the ball in the fairway, you pull out a club that you have the confidence in that you can hit straight and put it in the fairway. And to me, that's this pattern for me. If I'm looking at the stock market and I'm struggling and I'm trying to get out of a rut, go find the one pattern that you feel the most confident in. Over time, over the long period of time, you feel like this is kind of the one that I've done the best in. I know the best, and I can go find. Go wait for that. Go look for that. And in my case, these 7 criteria, this is something I would sit back and wait for. If I were going through a struggling period, this is probably what I would look for. So, again, I mean, I just want to follow up and make sure you guys are, I want to make sure you guys are understanding there's 2 parts to what I'm trying to do on the channel. One is I'm trying to show you how to use all the different indicators, the moving averages, the price patterns, the changes in trend, the MACD and the ADX in a single time frame, and then put it in multiple time frames to help you really put it all together. But on the other end of the spectrum, no matter how good you get in any of that stuff, if you don't understand the mental aspect of how taxing this can be from a mental standpoint, then you're gonna really struggle, and you're gonna get into this situation where you keep looking for more technical information. You want to get better at the technicals. You want to get better at learning about the market and all that. And that's really going to take you down the wrong path. In my opinion, you want to get better at learning about yourself and get better at learning how to be patient and get better at creating a trading plan and following a process, and you do that, you're going to get a lot better more quickly than going and learning a new indicator. So anyway, make sure you post any questions or comments. We'll see you next time.